Traders, how you doing? Tom Willard here with another video update. It is Saturday, June 4th, 2016. We're going to go through the markets, the general market ETFs here, the NASDAQ, the QQQ, the Spiders, SPY for the S&P 500. Take a look at where things are going, some of the trade ideas I've been sharing, some follow-up there, and look at how a really good example of a stop and why you should use stops in your trading, and no questions asked. So let's get started here with the Qs. Last time I talked, it was April 30th, I believe, when I did the last video. And the markets, the Qs had come down, and they went down to about the 105 level here. You'll see on the daily chart here in the upper left quadrant. On the right is the weekly. 60s down in the lower left, and the lower right is the 15-minute chart. Now, you notice we came down. You'll notice the weekly we came down. The moving average, the slower moving average below the higher moving average. Okay, we've got a pseudo head and shoulders forming here, but now remember the shoulder line needs to get broken, and of course with this messy candle here, it's completely jacked up the shoulder line. But nonetheless, okay, like I mentioned here a few weeks back in my last video, things were looking bearish, and since then we were able to test 105, test it again, bounce, test it one more time, bounce, and then in a sense you get a little micro mini inverse head and shoulders here where it broke the high of that line right there around 107 and change, 107.25, and it's broken back up and now come up to this previous resistance level here as indicated here on the daily chart at 111 and here at the same price 111 on the weekly chart. Okay, there's your line in the sand. Okay, if it can break above that high, and that high is, let's see here, 111.44. So say 111.50 to 112. If it can get above there, okay, technically the next resistance point is at 115 I talked about in the last video. Okay, so if you're short in this thing, and right now I am flat on the Qs, so I was short, took profits, got stopped out of my back piece, okay, for a small gain, and I'm out flat right now watching this now as it tests this area. Technically, if you get a break, notice how these bottoming tails form here. Things look like they wanted to fall apart, but then they bounced. Okay, that's a pretty vicious sell-off we had on Friday, only to turn around, bounce, and work its way back up. Right now, I think with the bearish sentiment out there, a lot of people, I think that there's a good chance this market goes up and tests that 115 high here, okay, right here. And therefore, I do not want to get short at this point. Now, if this can hold this area, okay, and you get a nice tight stop with the high here being 111.44, like I said, right? You can get in short at around 110, 109. Maybe if it can breach the bottom of this low tail here is 109.34, and have your stop right above there. But get out if it hits your stop, okay? But it looks like to me that this thing wants to go back up and retest that 115. Now, of course, you know, all depends on what happens. You know, we got the FOMC meeting coming up very soon, and that being the case, you know, if they raise rates, the market will react violently, probably. Okay, now we don't know for sure which way it's going to go. You know, the reports that and with the officials talking rate rise being a distinct possibility, the market went ripping after those comments were made, and then when the jobs report came out, horrible jobs report, which would lean toward the Fed not raising interest rates, the market tanked, which is counterintuitive, but then it did recover. Okay, so we'll see what happens. And again, don't assume that, you know, even if you know what's going to happen, if they're going to raise rates or not, that the market reaction is going to be that way. That's why you have to have stops and you have to have a plan in place. But right now on the major market indices, the Qs, I am not short anymore. I'm out. I'm not long either. I'm watching as we go forward. SPYs, I talked about this in the last video as well. You've got, you know, kind of the same formation where we went down hard, came up, went down hard, came back up, but not really a head and shoulders because this was a lower high. So in a sense, like I said, it was a little bit more relatively weak. But you'll notice here it is fighting with this resistance area. And so like I had said, I believe I had said in the last video, now is not the time to go short. Of course, it was different back in my last video because we were already extended down. But at this point here, it's definitely not time to go long because, again, we're extended up. We're trying to base out here on the daily chart, but we are at a ton of overhead resistance. If you want to get long, wait for it to get up to the highs, set up and clear that resistance point. That technically is where you should get in on the long side. Obviously, if you want to anticipate it, play games on the smaller time frame, tighten your stops up, to make your reward risk worthwhile. You can do that, and a lot of that is what I do when I see certain things happen in the market and I want it to be aggressive. I'll get in with a more questionable pattern, but a great reward for my risk return. And then you got to just get out of Dodge, though, of course, if your stop is hit. Do not ask questions. Do not add to your position. Take your stop and get out, whether it's a loss or it's a smaller win if you're trail stopping. Okay, which will segue nicely into my fit trade I talked about in the last video from April 30th. If you don't know about that one, check in, you can see that I won't go over what I talked about there, but I'm going to talk about that back 2/3 of the position. Okay, as I mentioned on Fitbit, I talked about it here. I had gotten long on this break above on the daily chart here. You'll see it right here. And you'll see on the weekly chart it was right here, breaking above this low. Retested, could not go lower here, popped up on volume, pulled back in low volume, popped up, and I got long. And I talked about how when it gapped up here, it was a pretty nice move, okay, over this series of days. And so I took a third off the table there with a nice profit. And I also talked about how I moved my stop up. Okay, and you'll notice that right here, a couple days after I wrote the video or made the video, it took out my stop right under $17 a share. And so either way, I was profitable on my first third of my shares here and my back 2/3 here. Now, of course, not as profitable because I got in here at 16 and change. Okay, so it's kind of a, it's a bummer, if you will, if you guys have ever been, in positions where you're up a bit and then you have a stop and then you only make half of what you would have made had you sold at the top. And we play those mental games with ourselves, and you can't do that. You've got to just play the candles. But notice now, on that particular day, thank goodness I got stopped out, because the very next day, look what happened. It gapped down big, and then it went down hard. I mean, this thing dropped from 17 to 13 in a matter of 2 days, from top to bottom. Okay? That's why taking your stops is vitally important. Now, it doesn't always work out this way. This day, it could have held 17 and not gone under my stop at 16.90, right? And I would have still been in it, then woke up the next day and the thing would have been down here 15 to 14. So in a sense, I got lucky that my stop got taken out here. You never know what's going to happen. And you will have, if you're buying and holding overnight, you will have situations where things will gap against you and you will lose a lot more, possibly, than you had anticipated losing, okay? But that's part of the game. If you want to hold overnight, you have that risk. However, on the contrary, you also have the benefit of a massive gap up in your favor. Okay, and that's going to segue nicely into my next conversation about this bad boy. Talked about gold. I said buy on pullbacks, guys. Buy on pullback. Well, what do you think I was doing when it pulled back here? When it got back here to the support, 116. I was buying at support, right? Like I said, I have a core position I'm holding that I bought way back here, about 102, 103. Okay, been buying, sold into this, bought more, sold into this. Okay. And it came back here to 116. I said 115 to 116. I'm a buyer. I bought it. Well, you'll notice here that it gapped up in my favor after that jobs report on Friday. Pretty nice gain. Really nice gain, actually. Okay. Now, obviously, I've got my core position where I was, sitting at 124 on those shares, and it came all the way back to 116. And the way I like to look at it, and I know I used to look at it differently. I know a lot of people don't look at it this way. They're like, oh God, look at all this money I lost. Like, no, I'm going more of a core position on a longer time frame. So I look at this as a buying opportunity and was able to add to my position, and on this gap up made a nice handsome return, okay, on quite a few shares. Sold into this, part of them, but holding the majority of it, because I think this thing's going to go back higher and test this 124 area. Also sold some puts against the position, or not against the position, sold some puts down here in this area. I said, hey, if it goes down to 114, I want to buy this thing. 112, I want to buy this thing. So selling those, how many shares I want to pick up, sell those puts into that, and you can also buy calls if you are bullish as well. So anyway, this is where, when you're holding overnight, it's a double-edged sword. You have gaps against you, and you can have gaps for you. This is a gap for you. And in the occasion of fit, I got, like I said, it worked out really great for me in both cases, where I was able to get out here. I mean, obviously, I would have preferred fit to go to 25, but that just wasn't in the cards for this thing. So I made profit on all, 3 portions of my position. Okay, and on the GLD, I used this as a buying opportunity and got in. Now, of course, GLD could crater. It could go to $90 a share. I don't want you listening to this video going, oh, well, Tom's saying this is going to go higher, that it's going to go higher. Do you think I have a stop in place for my core position and everything? You bet I do. Okay? You need to too. And if you don't know where your stop is and you don't know where to place it, you should not be using your hard-earned money to be buying and selling stocks. Okay? Get a plan together. If you have any questions about that too, email me. But I do talk about it in my series of 10 videos. The last one is around the plan. Check that out if you haven't already. Let's revisit Apple. At the end of April, I talked about how, hey, again, go to the video. I talked about do not short this. Do not short. I was blaring it through a loudspeaker. Do not short this. If anything, you should buy it if you want it, if you feel like you have to play it. And I said, luckily, I don't have to play this, so I won't. Look at how it played out. It based out, broke lower on massive volume, then turned around and ripped back up. Okay, so had you shorted this, your stop should be right in this 94 area, so you would have gotten out for about a $4 per share loss had you gotten in. Well, depending on where you got in, 92 to 94, probably a $2 per share loss if you got in here right into the lows um, and it popped back up against you. I did not short this, and I did not go long, okay, because like I talked about, is like no one's holding a gun to my head. I felt like it just was a low odds trade in either direction. But on the long side, obviously, $10 move in a matter of 3, 6, 9, 10 days, not too shabby. $10 move off a $90 stock, that's more than 10%, right? Not too bad. Now it's starting to roll over again. It's down in the downtrend on the weekly. If you're into shorting Apple, I would have shorted it here, right under this candle here. So at about 99.25 and put your stop at about 101. Okay, but I didn't do it. I wasn't around. I don't know if I was trading that day. I go lighter when earnings season is wrapping up, and then typically I'll pick up again really heavy when earnings season starts kicking up. Okay, so I'm not trading every day right now, at least day trading. But this one here, it escaped me when it hit here on the short side, and it moved down nicely. But if you'd gotten it, that's where I would have gotten it, and that's a trade actually I would consider taking. But I wasn't there, and I'm not in at this point. So watching this, but this is in a nice steady downtrend on the weekly. The daily chart has come down. It's popped up here pretty hard. That's why you don't want to chase extended stocks. That's another important lesson for you to take away here. Don't chase extended stocks. I talked about it in the last video on this one. I said do not short it, even though this is a textbook breakdown. You can see that when it did, it was so extended on the weekly chart at a support area, too dangerous. And you can see that if you played with fire, you got burned, okay, on this particular case. Okay, last but not least, I want to touch on the FANG stocks that I haven't talked about. Well, Facebook, really quick, holding up like a champ here. Like I said, I would not. The one thing I will not do is short this thing at this point. It's so strong compared to the market. It's leading. It actually may set up here as a buy, especially if the market starts on a tear. If they go the opposite way and do QE4 and the markets start going, I think this one will lead. I'm not saying that they're going to do that, and if they raise rates, who knows? Obviously off the last news, people were expecting it, and it was a bullish thing. Again, counterintuitive, but this one's a leader. Watch for ways to get on this one long, in my opinion. Amazon, this is another leader. I would not short this stock right now, guys. I'm watching it. I watch it for a long opportunity right now, though it is way too extended, okay, for my blood to be buying it up here. It's way too far gone off this big move down, okay? So Facebook, definitely closer to setting up as a long. Watch it for a long opportunity. Amazon, it's too far gone. I'm not going to go long. I'm not going to go short on it at this point. Netflix, I talked about staring 80 in the face. Well, it didn't get there. Okay, I talked about here. It came down, and 80 was this low, and I said look for 80, see if it can get to 80, and it didn't get there. So you can see that I was short in this thing, and it came up and it hit my stop here, 93. Notice how it can't see how there's two tops here. That's my stop area, $93.50 a share, and when it hit it right here, I got out of my position, got out of my short position. Thank goodness, because look at how it ripped up here. Okay, it ripped up quite a bit up here, and then volume dried up. Now technically, could get short back in here at about 101 when it broke lower. It's right here at 99.59. If you want to get short, you can see the crossover of the moving averages. You've got a massive head and shoulders here. Like I said, I think if it can break 80, 60 is the next stop. And I am entertaining going short on this thing real soon. Last but not least in the FANG, we got Google. Netflix is definitely the weakest of the four. And again, FANG, it's just an acronym, guys. It's not; these aren't the major four stocks in the market. I just talk about them here because A, I like to trade them. B, a lot of people like to trade them, and this being a YouTube free video, I want to be able to touch as many people as possible and talk about things that they may or may not be ordering, owning or not. Okay, Google's another one. It's still in an uptrend. You can see the moving average is curling over here, though. It got topped out here and topped out here. It looks like it's making a lower high. Again, if things go for worse, If the market turns over, I think Netflix is the top one to look short, then Google, okay? And Facebook and Amazon, even in a downturn, I wouldn't touch those short, at least at this point, until they start doing something like this on the weekly chart and start falling apart, okay? So that, excuse me, that is my video update for June 4th, 2016. I'll probably get back to you guys right around July, early part of July, because earnings season starts to heat up there in the first, second week, third week of July. And that's when things will get hot and they'll get going. So be prepared. In the meantime, if you got any questions about any of these videos or ideas, hit me up at tom@tomwillardtrading.com. Have a great June, and we'll talk to you guys in the next video.